Hello, 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 hello. Hi all, and welcome to another edition of TraderCast YouTube live trading, key trading levels for popular markets. My name is Phil. I'll be your presenter today. For those of you who haven't seen this before, if you are looking this for the first time, if you're looking for a community, you can check us out at mytradingskills.com. If you're looking for the education, check out mytradingskills.com. There's plenty of courses there which could be of interest to you. I'm just checking to see if this is all up and running now. Apologies. I'll just do this very quick. Here we go. Yes, this is all great. So sorry for the education. Check out my Hi Vavesh. Hi everybody else who is watching. Sorry, I was just checking to see if this is all streaming okay, and it's looking to be okay. Now we're gonna go and carry on with the normal spiel. For those of you who haven't seen me before, I had the privilege of speaking in front of various different industry events over the past 10 years, and I managed to help many people start with trading. So some of them were brand new, some people who went through our courses were intermediate and they needed help with a specific area of their trading activity. Now you're seeing the disclaimer now. There's only one slide after this which will show you some of my positions, open, closed, and what I did with them since I've broadcasted last, which was on Friday. But since I don't have your indication for investment and trading, I don't have your personal objectives, and I'm showing you setups and opportunities that I'm reacting to. I would like to stress that this is not advisory. This is basically my experience and my opinions. And if I can put it in a very simplistic way, I think this is a practical application of price action trading aided by technical analysis in a very simplistic way. And I think this is what traders at early stages of their trading journey should be able to do. So nothing really complicated, no perfect strategies that work all the time, no secret indicators, no amazing strategies that guarantee the win. This is very basic price action trading with multiple layers of evidence pointing to a possible and highly probable trading setup. That's all it is. Okay, now let's talk about some of the trades that I had open or closed. I was long S&P. For those of you who watched Thursdays and Fridays sessions, you know I was long S&P. I'm still long S&P. My stop loss is at the right level. I am leaving it for now, and I'll decide what to do shortly. I'll explain what I want to do when we start looking at the charts. I was long WTI crude from 91.90. I had a stop loss about 100 points below. The price initially started going in my favor. I was making a little bit of money. The price was then fluctuating. I was going in between winning and losing, but nothing major. And then I've decided to move my stop loss slightly higher, and I was stopped out of this trade. So this was a losing trade. It didn't work out. Looking at the crude oil now, maybe I should have re-entered again at a different level, or maybe kept it, and it would have played out. But I'm stopped out. I'm no longer in that trade. Also, I was long sterling dollar from 133.36, and I've closed. I got out of that trade nice and round number 134. Why not? Thank you, Mr. Market. So happy with those outcomes. I'm looking at a couple of different scenarios now. There is a few shorting opportunities with US indices, not yet, but at specific levels. Gold looks bullish. WTI crude looks bullish as well. and there's a few currency plays as well which could be of interest, but I'll talk to you about all of that in more detail. Now, just to show you where I am with my trades, this is the only open trade. I'll just do that first, and then we can go through a boring bit. Let's talk about news that are moving the market and how we might possibly react to that and what to expect this week. It could be a volatile week, and I think it's likely going to present a number of trading opportunities. Now here we go. This is my S&P. This is only a 15-minute time frame. I got in at the breakout here, the reversal. I'm currently in this trade. My stop was initially below and then closer, and at open I break even, slightly higher, slightly higher, slightly higher. So my stop is here. I'm locking in about 90 points on this trade. What I'll do is I'll move my stop higher again, just at close to these kind of lows of the overnight trading when the market kind of gapped. We're seeing the oversold bounce back now. I would like to possibly take profits higher. I was looking at 44.30, but I'm actively looking at 4,400 now. So I have a kind of mental take profit area here at 4,400. Or if I see a big reversal, possibly loss of 4,300, I might react to that as well. I might get out of this trade as well. But my stop is not there just yet, because we are heading towards the US markets open. They'll open in about 15 minutes time frame. Sorry, in 15 minute time, apologies, 15-minute time. It's 2:15 my time here. It's in 15-minute time US cash markets will open, and we can possibly see a bit of a movement, and I'm looking to see if I can hold on to this position and then decide what I want to do. So I'm getting ready to get out of this trade. It's a good trade. Really happy with this trade. It was a logical setup. For those of you who can have access to TraderCast, you know that I've posted it in the community with the setup and the reasons why and the whole explanation. And also we are looking at this geopolitical tensions and news coming up from Moscow, Ukraine, Washington, and European Union with special attention, because that's basically what's driving the markets today. Okay, so hi Habib. Hamid is saying, hi Phil, I observed that markets opened with very wide gaps today. I believe this is due to geopolitical reasons. Yes, there was a big news. The reasons were kind of fluctuating between something that can be perceived to be positive for the market and then negative, mainly centered around potential negotiations and de-escalation of kind of military action in Ukraine, and kind of tit for tat there. Who wants to go to which country, and which country will be able to host it, and will it be in Geneva, will it be in somewhere else, who can fly to Geneva now from the Russian side, because obviously some of the people who can be involved with these negotiations are no longer able or maybe even willing to travel to some countries and so on. So it's kind of that's what's basically triggering the volatility. Okay, so what you're seeing here, this is gold, this is dollar yen, this is sterling dollar at 134.08, 112.11 for euro dollar, and this is Dow Jones, and this here is S&P, and we have S&P, these are the highs from Friday, overnight, so that closed on a really kind of positive note. I'm looking at these lows down here, and then I'm also looking at these lows down here. So this basically what happened is this. For those of you who are not familiar, this was Friday's move, Friday's move, Friday's move, Friday's move into here. So we closed here on Friday, and then when the markets opened on Sunday, so they open on Sunday when New Zealand, Auckland opens, and then subsequently all the other Asian markets follow through in subsequent hours and so on. There was this big gap. So this is what Hamid is talking about. Hans, does Hamid know there is a war going on? Yes, he knows. Yes, he knows. Absolutely. So basically, that's what it is. So that big gap happened, and then overnight the price went lower, sideways, and then it did that. So basically, this is where we are at the moment. This is ahead of the US Open. So a couple of scenarios here. So the first scenario that can play out for S&P, and I'll be very quick with this because I really want to cover something that's important for all of us this week. So the first scenario would be something like this. Okay, so the first scenario would be at the open, we see a rally towards where we closed on Friday, and then from that level we see a dip. Okay, so that will be a gap fill at the open and a rejection, and if that happens, I would happily participate in this, closing my long, getting out, and so on. If we see a rally and a breakout and then retest of Friday's closing level, which is here, then potentially that could open the way for another leg higher towards 4,444.33, which is where I would like to take my profit. The other alternative which could possibly play out is at the open we could see initially a push lower, and then what happens here at 4,300 would be telling. So if we see a pullback to 4,300 and then a rally from there, that could still be okay. If we see a pullback to 4,300 and a loss of that level and a retest of this level, that could then open the way for a gradual move lower, potentially opening the way for the retest of 42.65. So that's where we are with S&P. I am paying attention to this. I want to see what's going on and how I might react to this, but so far I feel that if we see some positive news, potentially we could end up with this kind of at least attempted rally higher to close the gap from Friday. At least close the gap. Hi, Bobby saying hi. Hi Phil, out of curiosity, what types of indicators have you used that generally help you with your final decisions? Also, if possible, kindly share links to courses that you mentor. Well, Babish, just go to mytradingskills.com. This is the link. This is the only link that you need, mytradingskills.com. Click on that. Some of our courses are free, so sign up, check them out, see if you like them, and if you need help with, see how I teach, and if you like what I teach and how I teach, and this is useful for you, then you can ask for more help with a specific area of your trading. So that's all it is. It's mytradingskills.com. So that's where we are at the moment. Indicators, I'm keeping this very simple because this whole process that I'm going through at the moment with YouTube Live is, as I said, very, very simplistic way of to trading. For those people who kind of use TraderCast in the past, you know that I'm using various different indicators as well. I'm using candlesticks as a confirmation of the entry. I'm using fibs, I'm using pivots, I'm using oscillating indicators, I'm using moving averages, I'm using various different things. Hi Kasali, hey. But I don't want to talk about that right here because this is not a place for it. Because there is probably loads of people who are brand new, and if we start talking about all of this other stuff that might freak them out, alienate them, they might be bamboozled with terminology and what do you mean and how do I use that and does it work every single time, and you think if I apply this on my chart and I follow that I'll make money all the time, and the answer is no. For people who have traded before, you know the conditions within the market sentiment changes. The only thing that's really true is the price. Price is the only thing, and the best indicator. I was often asked when I was doing the live sessions or when I was presenting at different events and so on. I say, Phil, what is the best indicator you use? What is the one best thing that you would always, stick to? And I would say that's the price, because every single indicator would need the price to be calculated, because they're dumb, unemotional mathematical formulas. Without the price, none of the indicators exist. So you need a price in order to apply an indicator which could potentially give you the additional confirmation that something is really happening. Indicators are lagging the price. There are no indicators which can forecast something that might happen. They're always lagging the price because they need the price to be calculated. That's the basic concept of it. Okay, so anyway, I am talking about all sorts of different things that I shouldn't. What I should be telling you about is something like this. This week it's going to be a fairly busy and potentially very volatile week. Okay, and now I'm going to go into a little bit more detail because yet again, if you're brand new, don't worry, this is not complicated what I'm talking about. But over the next 5 trading days, we have a number of events which are coming up which will trigger the volatility across the range of financial markets. So we are not dealing just with geopolitical tension. Okay, we are dealing with something else now. These are economic releases, and this could be central bank speakers. This could be releases of that could trigger volatility across various different currencies, or maybe even equity markets as well. So the big one is going to be on Friday, and there is an event which happens every single month. That event is called Non-Farm Payroll Event, or NFP, Non-Farm Payroll. And basically what it tells us is how many jobs have been created in non-farming sectors in US, in states. At the same time, we will also get US unemployment rate and average hourly earnings and few other things. Quite often Canadian numbers come up at the same time as well. But that number is giving you a clear indication of how well the US economy is doing, because if more people are getting jobs, if more jobs are created and the unemployment rate is dropping, that's normally perceived to be good for the ongoing expansion, for for the market. Consumers are happy. There is disposable income. They'll go and they'll buy a few things which are nice to have but not necessities, and they'll travel more, and so on and so on. So there'll be more demand for goods and services, and that's basically what's supporting most of the economies globally anyway. Okay, so if unemployment rate is increasing, therefore less jobs have been created than anticipated, or people are not getting jobs for whichever reason, that's normally signaling a bit of a contraction. Okay, and central banks are keeping a close eye to that type of economic data, because what they do is they decide their monetary policy. They forecast their monetary policy going forward based on a range of different economic data releases, and this is one of them, and this is probably very, very important. So there's inflation and all sorts of different things, but employment is really important. Okay, so when I'm talking about central banks, on Wednesday, the 2nd of March, we have a Bank of Canada monetary policy decision, and Federal Reserve Beige Book and Fed Chair Powell would deliver semi-annual testimony to House Financial Services Committee. Fed Evans, Bullard, and ECB Nigel Lane and Bank of England would also speak. So we have a range of central bank speakers who will possibly tell us how they feel about what's happening with the markets globally, and how that might impact their decisions to hike rates going forward, because that's what everybody's talking about. Higher inflation, the basic way for them to control the overheating economy, i.e. them, central banks, is to start hiking rates, and by doing so, the banks who are hiking rates are normally seen to be supportive for that currency. So if Federal Reserve decides to hike rates higher than what market expects, that would normally trigger a US dollar strength against other currencies where banks are not doing so. So that's the basic premise. So there's a number of different things which are coming up this week. But Wednesday and Thursday we have Fed Chair Powell. He's delivering his semi-annual testimony before Senate Banking Committee, and also on Friday keep an eye on that non-farm payrolls, US unemployment rate, and average hourly earnings. Okay. Here we go. So Bhavish, true, I'll have a check at the website you mentioned. Absolutely, Bhavish, check it out. And if you like what you are getting there, make sure you let me know if you like it and so on. Hey Maurizio, how are you? Lovely to see you. Welcome back to another trading week. Welcome to another trading week. Here we go. Let me just see who else is in here. Oh, plenty of people. Robert Rose, Said, Goldmaster, Mr. O'Connor, Cahill, Zamora, Uzi, Tommy, Nicholas, Lopez, I suppose, Jesus, Enrique, Daniel, Cesar, Alejandro, Alex, Angelo, Angelo, I'm not really sure. Plenty of people watching, so thank you guys, and welcome. Now, I will just very quickly cover a couple of things here, because I started talking about what's coming up with the economic data releases, and
player connected.
Let me see. The other thing that we should mention as well is a US equity briefing. So equities fell this morning, sovereign bonds rallied, and commodities surged due to heightened uncertainty and a new wave of sanctions against Russia for the invasion of Ukraine. US index futures dropped alongside European markets. Banks will, with exposure to Russia, led declines, while utilities and defensive stocks gained. British Petroleum, I don't know if you guys are trading stocks and shares. Shares fell in the pre-market after saying it would sell its nearly 20% stake in Russia's state-controlled oil producer Rosneft following Russia's invasion of Ukraine. And if you are trading FTSE, i.e. UK 100 market, that's the big one, because BP is one of the top 5 companies that has the most impact or most influence on FTSE 100 index. Okay, so Philip, enough of the kind of economic releases and so on. Show me some charts. So let's go and check out a few charts and see if we can spot anything that's worth looking at today. So the first things first, let's talk about gold, and then we're gonna start the other way around today. So this is gold. Loads of indecision here, so let me just remove some of these annotations. Loads of indecision here. I still have my major resistance at 2000, and I would like to buy at 1880, quite likely. I would like to buy at 1880. Now, this looks like an uptrending market in various different time frames. So we have low, higher low, higher low, higher low. So that's an uptrend. Higher low, higher low, higher low, higher low, higher low. Uptrend. Okay. So now people are saying, Philip, stop saying higher low. Why does that matter to me? Well, because this tells you who is more dominant in this market. This tells you what is a prevailing trend. And you want to trade in a direction of the prevailing trend rather than against it, because if you are trading in a direction of the prevailing trend, you're potentially increasing the probability of being right. Okay,
we're seeing a range today of 61.0 to 68.5.
so I'm gonna leave this news feed on, because just in case if something happens that we should be aware of, we'll hear it. Now, here we go. So, daily is uptrending, 4 hourly. This is the 4 hourly chart. It's uptrending. That means each one of these little candlesticks is 4 hours worth of trading. So what would I like to see? I would like to see a potential gradual movement to the downside towards 1880, and then a rally from here. Okay, so that means that this trend is still intact and it's safe to kind of look for confirmation around here. So once you get your confirmation in the shape of the candles or whatever your confirmation might be, you are then saying, should I take this risk? Is this risk worth taking a punt, or does it make sense from the risk to reward ratio point of view? So if you're taking this amount of risk, but you're hoping for the extension to the upside, which will have multiple times of that risk, then
Foreign Minister on
the answer is yes.
reportedly saying Ukraine
Okay.
is not ready to surrender or capitulate to Russia. Again, to repeat, this is a CNBC piece citing the Foreign Minister of Ukraine. Ukraine is ready to continue seeking a diplomatic solution, but not ready to surrender or capitulate. The comments coming as Ukraine and Russian officials are holding talks in Belarus, they note.
So we're seeing a move higher in indices, which is quite good on this news. And I would likely be a buyer. In that case, I would put my stop at 1870, and I would like to take my profit towards 1937, possibly even 1950, 1960, which is this area here. And then if I see a breakout above that level, I would likely be looking for 2000 again. So that's where I am with gold. So bear with me a second. Gold. I am going to do that. So what I've done now is I've just placed a little limit order in the system which I can remove. It can be cancelled, and at the moment while I'm talking to you, or if something happens while I'm asleep and that level is hit, I might get in there. But I would like to see a corrective pullback and then a nice reversal. So something like this. 3, 5, 8 red candles and then a nice big reversal there. That would be nice. But let's see. So gold, nothing at the moment. We are too far away from the entry, but that would be the premise. That would be the premise. Looking at this here, and this here, so you can see that this energy is building up, and I keep saying the same thing over and over again. Energy is building up, and when you see this type of coiling price pattern, so look, this, it's not a really textbook, because this is the wick, this is below the body, this is the wick and wick, but you get a sense that price is rallying, unable to break higher. Sellers come in, pushing the price lower, buyers come in or sellers take the profit, and this creates a higher low. Then there is another rally which is lower high than here, and then either who was long is looking to take profit, or new sellers are coming in pushing the price lower, and then the price goes lower, creates a higher low. So it's indecision. Bulls and bears are fighting here, and this is a clear indication of energy buildup, energy buildup, energy buildup. And this type of energy buildups normally precede a substantial and explosive breakouts of some sort. Okay, and it will be great to see if we get a pullback and then maybe
an update here from Ukrainian President Advisor. The talks with Russia are still ongoing.
Okay. The other thing that I want to talk about is crude oil. So let's talk about crude oil quickly. We talked about S&P. Crude oil, we have these areas up here, 90, 99, 98, and then these areas up here. So nicely uptrending, higher lows, higher lows, higher lows, higher lows, higher lows. Brilliant. Where would the entrance be? Well, probably around 92.50 or thereabout. So this area here, and you can see Hamid was talking about gaps, and you can see these gaps in more or less every single market today. So ideally it would be great to see a pullback, 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 and then a nice rally from here to the upside. So then this trend will be intact, and we will have a sequence of higher lows, and then you're looking for a candle that looks like this, or a combination of these two candles. This is called bullish engulfing, or maybe a combination of candles like this, a morning star reversal, to happen here, and then you're looking to put your stop below. So the stop would be down here about 90, 80 or 91, so about 130, 150 point of potential risk for the extension towards 98, 99. So from the risk to reward ratio point of view, you have multiple amounts of risk in the potential profit that you're expecting. So 3.5 or 3 to 1 at least, and so on. And then it kind of makes sense, and you say, okay, fine. Should I do this? Does it meet my criteria? Did I get a confirmation to get in? Is this supported by some breaking news? Is this supported by economic data release? So if you're trading crude oil, yet again, I am expanding this a little bit more because I'm recognizing some names who are in, and I know you've been on some of these sessions before, but if you're trading crude oil, every single week there is a report that comes out. It's called Crude Oil Inventories Report. It comes up on Wednesday. It comes up on Wednesday, my afternoon time.
Just over a minute now to release of the US Chicago PMI for February. Again, a reading of 62.0 expected.
And that tells us how much oil has been added to the storage and how much oil was consumed over the past 7 days in US, okay? And this is direct indication of supply and demand, and as such, if you have increase in demand and a lack of supply, that's normally perceived to be very bullish for crude oil. So there's more requirement for oil by companies or people, or maybe the weather got suddenly very cold and refineries need to produce more heating oil, or it's a driving season, so people are going on holidays and they're driving, they're using their cars, they're commuting to work, offices, holidays, things like that, planes are flying and so on. Or there is a geopolitical tension.
56.3, 56.3 for the Chicago PMI for February, dropping below the expectation of 62.0.
Or there is a geopolitical tension somewhere in oil producing nation, which then can impact the outflows of oil and delivery of that commodity to the market. So that's the basic premise. So it could be Middle East like in the past, and this time it's Russia, because Russia is oil producing country as well. Okie dokie. Let's go and check. We talked about S&P, we talked about gold, we talked about oil. Let me just check Nasdaq now as well. So I know quite a few people are looking at Nasdaq, and then we can go and check out a few currencies and see how that works. So this is our Nasdaq. The major resistance is still up here at 14,240. Nothing really changed. This is where the price gapped at the open. Well, not really open, sorry, when the futures opened last night. So that shows the price. The US markets have been open for the past 15, 16 minutes only. So the cash markets have been open for that short amount of time only. Now, a couple of scenarios again, very similar to S&P. We could see a rally from here into this zone, closing the gap where we closed on Friday. And then from here we could see a bit of a sell-off and potentially another leg lower. So in that case, this would be a good area for a short sell, 14,200. If that happens, 14,250, perhaps even this area here. If we see a breakout like this and then a retest from above, then that would negate that scenario, potentially opening the way for another leg higher. a tricky one, a really, really tricky one. I think we could see a bit of a pullback today. I think we could see something like this. Otherwise, a breakout above. So key trading level for you guys is at 14,260. 14,260.
Just getting further comments here from the EU as Borrell notes that on the financial sanctions against Russia, they're starting to think that they should do more.
See, more sanctions, markets don't necessarily like that, because the more complex these sanctions get, it's not just that this might impact on Russia, but it might have impact on other countries, regions, or companies who were depending on transactions with Russia as well. And that's the logic why market is behaving the way it is. Is there anything you need possibly covered, or are you guys looking at anything? Is anybody else looking at anything? There's a bit of a selling pressure here in dollar yen. Dollar yen is heading towards 115 again. That's the level, 115. I think it's going to be a fairly busy week towards the end of the week. I will definitely start this broadcast earlier on Friday, probably an hour earlier than what we did today, because of that non-farm payroll. So just making sure that you know. So dollar yen pulling back. So where would be of interest? So this could be of interest as well. This could be of interest. So lows, highs, 115.15 all the way down to 115. Is it worth doing anything at the moment? Not really. This is the hourly candle. It's not complete yet. (15-minute). There's a bit of a wick forming, but nothing yet. Is there anything? Maybe I'm front running this if I'm doing this now. Dollar yen. Okay, let's see. I just went long dollar yen, and I'll just readjust it now. I'll show you where my stop is and all of that. So if I can get a few pips out of this trade, I'll be happy. There we go. So this is a 15-minute time frame. If I go down to a 5-minute time frame, it's giving me that lovely reversal here. So you can see there was a selling pressure, selling pressure, selling pressure, and and then sellers got exhausted, they decided to get out, or the buyers started coming in and finding the value at 115.15, 115.20 thereabout, and now we are seeing a bit of a reversal. So my stop really is down here. I'll put my stop just below the wick, here. I don't know if you can see that or not, but so what would I like to do with this trade? Well, I'm seeing this as a little bit of resistance here at 115.50, 115.50. Breakout above that level, 115.60, 115.70, and then 116 to the upside potentially. So I don't have a limit order at the moment, so I'm going to do is I'm going to put my limit order here just to have it, and I'll see if this plays out okay. So risk to reward ratio 3.5 to 1. If I'm wrong, I'll be stopped out with very little, about 10 points on this trade. If I'm right, I might be looking to take partial profits here at the cluster of these lows, and then partial profits up there. Let's see. Okay, let's see. I'll keep you informed. So I'm long.
An update here from the French presidency that Macron did say
Dollar
to
yen.
Putin today.
Babish is saying I'm looking at cryptos. Yeah, I looked at Bitcoin and Ripple and Ethereum, Litecoin, stuff like that.
Ukraine presidency.
But I don't trade them. I trade only what I really understand, and I trade what I think I can forecast the potential breakout in volatility. So I can time the volatility in some of these markets based on the economic data releases, or news that are coming out, or events which are scheduled, or things that you let's say if you're trading individual equities, like shares, companies, they'll become volatile when you get earnings season. So you can time that. So I understand that if company is performing better than expected, if they're showing more earnings, more client acquisition, if they're showing more profit per item, service, good sold than before because they improved something in the way they work, then that's normally perceived as good for the share price, and then you can very quickly identify the value. Akunda, hi Philip, I'm looking at gold at the moment and see an inverted head and shoulder pattern, but I'm probably wrong. And what is meant by a gap? Okay, so let's go back to gold very quickly, and so gold, this is gold, and gap is where it closed on the previous trading day and where it opened now. Okay, so this here is the closing level on Friday. Okay, so maybe you can't really see it. Okay.
So the French president noted that Putin did confirm his willingness to engage on all 3 points.
So this is where the gold closed on Friday. 1891.5 or thereabout. Depending on your broker, you might get slightly different price. And then there was no trading. There was no trading in this market up until this candle opened, and this candle opened here. Okay, it opened here, and it rallied, and it closed lower. Okay, there we go. There we go. So this is where it closed on Friday. This is where it opened last night. So 27th of February, last night. I don't know where your time zone is, but this is normally when New Zealand, Auckland opens, and that kind of market stays open for a couple of hours, and then other markets open, like in Australia, and then subsequently the rest of the Asia and so on. So this, from this point, the highest price of the trading range was here, the lowest price of the trading range was here, but the price closed here. So this is referred to as a gap. So this is a gap up. Okay, you can also have a gap down. So if the market closed higher but then opened lower, so this is called a gap. Okay, so this is where the price gapped away from where it closed on the previous trading day. And the logic, there is a school of thought which says that gaps are normally closed, and so this was the gap, and then here we go, boom, 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 boom. Eventually the price came close to where the
An update here from the White House that Biden will be hosting leaders of Southeast Asian leaders in Washington, taking place at the end of March.
Not exactly, but close to where the market closed on Friday. So this would be referred to as a gap close. Okay, so it's almost like a self-fulfilling prophecy. Market participants expect gaps to be closed within 3-4 hours, 5 hours of the trading activity, or thereabout. Otherwise, if that does not happen, then that triggers a reversal of some sort. Guys, I don't mean to be educating you here. This is not my this is not really my intention here. What I was trying to do here is I was trying to kind of talk more about the trades and show you a practical application, what I think, you know, most of the people should be able to do. But thank you for asking. Thank you for asking. So in relation to gold, so you're saying inverse head and shoulder pattern. I don't know where it is. Akunda, what time frame you're referring to? Inverse head and shoulder pattern. I can't see it, sorry. Maybe I'm looking at the wrong thing. Maurizio is saying we'll have some volatility because UN emergency meeting and UN meeting they are speaking right now. Okay, well, thank you for sharing. So let me just see. Let me just check Reuters news feed. Ceasefire talks begin at Belarus border, but battles for Ukraine cities go on. This was 5 minutes ago. Russian and Ukraine officials met on the Belarusian border to discuss a ceasefire on Monday, while invading Russian forces met with determined resistance from Ukrainian troops and civilians on 5th day of conflict. So that's all I have. UN climate report. No. Nothing else. Ceasefire talks begin at Belarusian border, but battles for Ukraine cities go on. Yeah, so it's the same thing, just Wall Street opens lower as West ratchets up sanctions against Russia. Wall Street main indexes fell at the open on Monday as investors assessed the fallout from the new set of sanctions imposed by the Western countries on Russia over its invasion of Ukraine. So nothing, guys, nothing really new there. Reuters is also reporting Hungary will not allow lethal weapons for Ukraine to transit its territory. And it seems to me that he is speaking at UN. Okay. So far, this dollar-yen trade is not looking good. This is not looking good. Okay, there was a bit of a bounce, but not good. Let me just show you where I am with that. So it attempted to go higher, but it's doing this. Still early days. Stop loss is at the right level. If I'm stopped out, I'm happy. It's a small loss, which could happen any minute now. There we go. Which could happen any minute now. Let's see. Still in a trade. And the other trade that I still have open is S&P, and that's doing well. I'm really happy with that one. Still stop losses at the right level, so I'm currently long S&P. Stop loss has been moved for those of you who are probably watching, who have seen this from the beginning. Slightly higher, so this is where the stop is. My mental stop is at 4,300, which is up here. So if I see a flush lower and a loss of 4,300, I would likely react to that. Maybe even sooner. 43.10, maybe here, where this little trend line is. But this is the gap. So Akunda, this is a gap as well. So this is where S&P closed on Friday. This is where it opened last night, and then this is referred to as a gap close. So not completely, but nearly. Okay, nearly there. So oh, plenty of chatter here. Well, this is great. Thank you so much, guys, for chatting. It helps. It really does. I'm UK time and caught that last night as held long over the weekend, but hearing people say close the gap. Okay. So Akunda is saying that he is working on UK time zone. Brilliant. On the 1 hour and 15 minutes, but perhaps I'm looking too short term. So gold, inverse head and shoulder. Sorry, I can't see it. I can't see it on my charts. So this is 15 minute. I don't see it as a inverse head and shoulder is usually found at the bottom of the trading ranges. So this This is the example of inverse head and shoulder. So there is a shoulder here, there is a head, and there's a shoulder with a neckline. Okay, and the way, if obviously this is Friday closing, so you wouldn't take this because markets are closing. Why would you do that? But if this was a mid trading day, then you can play it two ways. You can wait for a breakout above that neckline, which is referred to be a neckline here. You're looking for a rally and a breakout, and only when you see a breakout, that's confirming the existence of shoulder, head and shoulder, shoulder, head and shoulder. Until that happens, it's not. It can become something else. If you didn't catch this breakout, you can wait for a reversal, a breakout, and then retest. So you can catch it here again. And the way people trade it, people who are a little bit more conservative, they would take the distance of the shoulder to the neckline and extend that many points to the upside. People who are looking for a little bit more will take the distance from the head to the neckline and extend that at the breakout level, and this would be their take profit. So that's how it works. That's a basic premise for shoulder, head and shoulder. And you have two types. You have inverse head and shoulder, which is basically a bullish reversal, or it could be it's a downtrending market and short sellers are getting exhausted. This could be their take profit level. Okay, topping head and shoulder, if you see it at the top of the trading range, then yeah, it doesn't exist here. So something like this: shoulder, head and shoulder, and then you see a dip lower. Okay, there's one here: shoulder, head and shoulder with a neckline, and then there's loss and retest. Look at the rejection here. So shoulder, head and shoulder, loss, retest, and off it goes. So something like that maybe. Let me see, where am I now? Am I still in this trade? Yes, still in this trade, barely. I'm still in this trade, barely. Stop is at the right level. My stop is at the right level. I'm not moving it. Let's see. I would like to see a little bit of a push higher and a breakout. And I would be happy for 2-to-1 risk to reward ratio. Maybe even partial profit taking and stop at break even, something like that, as a scalp for today. Excellent, guys. We've spent quite a lot of time today. We've been doing this for over an hour, and people who are kind of watching this because some people don't watch it live. And what I'm noticing, that people are kind of watching recordings. And then they go and say, oh, this is what he was talking about on Friday, and this is what he was talking about Thursday, and that's why this trade is open, and so on. So they're kind of going backwards and backdated and checking it. So and what I've noticed, that they're skipping through the recordings, because obviously who wants to watch something for an hour? I'm the same. If I see a video that I want to watch, and then the first thing I check is how long is it, and so on. Okay, that's where we are with dollar yen. The last thing that I'm going to do right now is I'm going to tell you what I'm going to do with my S&P. Yet again, I am leaving it open. I'm putting my stop now at 4,300, which is there. Okay, and I'll open this up now in a much shorter time frame and see if I should get out of this trade sooner, but leaving it running for now. A level at which I would possibly look to engage if you see a nice rally is 4,400 again. So that'll be another level of interest for me. either as a take profit or potentially as a little rally and a reversal there. Okay, so that's where I am with S&P, but really happy with this trade, keeping it on, and not changing anything else apart from moving my stop at 43 even, 4300. Okay, it was lovely talking to you all, and stay safe, happy trading, and I'll speak to you all tomorrow. Thanks, guys. Thank you for watching. If you know if you know somebody else who might benefit from what we're doing here, let them know. And I would appreciate your support. Thank you. Bye for now.